Good morning, happy Sunday to you, or happy whatever day you're actually viewing this on. Just a little ramble based on some software dev I did over the weekend in case anybody is interested. It's quite interesting. It's machine learning, it's done in C Sharp with Ninjatrader as the front end. Very simple way of doing machine learning. So we have this chart here. It's using Unirenko just because it's really simple to use for these sort of things. And what I typically have in my real-time setup is a whole bunch of algos, and at their most basic they output one of three values, either a 0 for I have no bias, a -1 for a short bias, or a 1 for a long bias. And I'll look at a mix of about 50 of those algos in total, and some trading decisions are based on those, particularly around entries and exits. But for this, we've gone much simpler. This is interesting to me from the point of view of many people use indicators and they say things like never enter below the MA long, or never enter above the MA short, or only do this when XYZ is this. I'm not sure a lot of people have anything other than observations to back that up, and charts, particularly Renko charts like this actually, can actually be quite deceiving because entries and exits visually look great, but they in reality can be a little far away from where your brain seems to think they are when you look at a chart at scale like this. So one of the things I like to do for fun, if not profit, is test those indicators and see if they have any actual real, I won't say predictive value, but any real edge in determining if price continues to go in the direction it's started off in. If an indicator does in fact have that type of edge, then you should be able to statistically prove that. And that's why I write a lot of this software. So to get into the meat and potatoes of what this indicator I've written is, you'll see a whole bunch of numbers here on the screen, and sorry it's a bit hard to read because I've got some background colouring in and I didn't bother to make it faint. But what we're doing is feeding a series of inputs into a model, and at the beginning it has absolutely no clue if those inputs should have a positive bias on price or a negative bias on price. So it takes, in effect, a random action. Could be buy, could be sell, could be do nothing, could be hold long, could be hold short. But what it does, it measures the efficacy of that action over a short period of time until it determines, hey, I've done well or I've done really bad, and it gets out. Or in the learning stages, it takes an occasional random action just to mix up the sort of inputs and learn at a better rate. It measures the result from that, it puts it in a table, and that state is then associated with that reward. But it does go back and do this many times, in fact many thousands of times over a learning session. And those states will become typically associated with a edge, with a reward that I will either have an edge positive or negative for the action associated with it. I hope that makes sense. And then from that, over time, because you keep repeating actions in different price scenarios with that set of inputs, you should learn whether that set of inputs in that certain scenario has an edge long or short. And that's what I'm testing here. For my testing, to simplify it, I'll show you the indicator properties. I just called it SARS Scalper because it's a form of Q-learning. I have these 1, 2, 3, 4, 5 algo ID inputs. They're just little trend following inputs. 14 is the PJS Heikin-Ashi indicator, so that's just really indicating if the bar is up or down. This is a moving average, and there's a HA delta, Heikin-Ashi delta indicator. Those are just a few of the ones that I tend to focus on for short-term momentum when I'm looking at charts in real time. But again, most people, when they look at those things, are just really using observational skills rather than statistical data, and that's what we're looking for here. Few values: alpha, gamma, epsilon. These are just related to how quickly the algorithm learns, also how relevant current results are versus past results. And epsilon is the little value which you disable if you're actually doing it in production mode. What that does, in here it's a 10% chance of actually encountering a random action. And when you're machine learning, it's often useful just to throw in random actions, particularly in reinforcement learning, because a random action may turn out to be better than a learnt action in the past. And if it is, that random action then increases the score of that particular set of inputs to the result, and so on. We save the state in a small file. We can load the saved state, so all of our training session data is basically preserved for use in real time. And that's about it. It's a very, very simple indicator, this one. So at the moment, from that set of inputs, we've learnt 227 different states. One of the issues with this type of learning is, as your number of inputs increases, depending on the values those inputs can have, your number of states, possible states, increases dramatically. It can in fact run into billions with a set of 50 inputs, so it's not viable small scale for everything. So whilst we have 50 zeros or 50 inputs here, I'm only actually feeding in the inputs from a few of those algos which I mentioned, which I showed in the settings, and that's because of this reason. I designed it with 50 inputs so that I could try running it with all 50, but you will end up with tens and tens of thousands of different states in my instance, versus maybe a few thousand for this. So this is an easier starting point. The only other thing I did, there's a few pieces of context thrown in with the states. With regards, very simple, just are we doing well in the current trade? Is it a rubbish trade or is it a really good trade? And then what sort of volatility we're currently in. Have we moved, 100 points in the past 100 bars, or have we just moved 10? So there's like a low, medium and high. Again, that's just those three options to keep the dimensionality low. And then we also have trade duration, and again it's just filtered into long, medium and short, and that's again three options versus possibly hundreds, which makes it much more difficult to learn. And then this is what we have: the white backgrounds, difficult to see here, there where no trade is placed. The green backgrounds are when you're actually in a trade, and the red backgrounds are when you're short. Obviously the green is long, red's short. It seems to have learnt to scalp fairly short periods here. It's only been running actually for a few minutes, so it hasn't particularly learnt a lot. I've just in fact, yeah, that's empty chart. So from there through to here, so it hasn't been running long. Backtesting is not a quick process here, and there's a little icon here on the edge which is just hold long, hold short, go long, hold short. So we have a recommendation here: hold long. There's an entry price and so on. Again, sorry, it's difficult to see behind all these colors, but the status display just shows the entry price, whether we're currently long or short, the reward that I'm feeding the bot as its mechanism to determine if it's doing poorly or well, And then the open P&L for this trade, we have the current state, which is the set of inputs being fed into the model now, and then we have the top best 5 states for buy, sell, hold long, hold short. Those are measured rewards from the past, just so it can select optimal biases. So maybe that's of interest to somebody messing with machine learning and Ninjatrader and code. Maybe it gives you an idea of maybe how to go about playing with some of this stuff. If nothing else, it's a really good way to test simple trend type indicators and things that you might use, because if a model like this over time can't learn to use them mechanically with a profitable bias, then it's very likely that the indicator you're using isn't consistently profitable. You probably have to mix in lots of other things like context, timing, volatilities, things like that. Possibly lots of things you're not even thinking about at the time. But again, my whole premise is that if you have a mechanical strategy, and it is a truly mechanical strategy based around a simple indicator, like don't enter above, don't enter below, enter above, enter below, things like that, then a machine certainly ought to be able to learn that. And if it can't, maybe you need to revisit that premise. Anyway, I will shut up now and let this replay run, and you can just see how it goes. I'll probably speed up from here to the end because it may take about 30-40 minutes. Have a good weekend, if it is the weekend where you are now. Cheers. One little thing I'll mention, obviously, in the top right here we have a cumulative reward and we have a cumulative P&L. P&L doesn't take into account spread or slippage, it's just literally close of bar to close of bar. So on the entry we'll take the close of the bar, and on the exit we'll take the close of the bar. So it is optimistic, but it is also positive, which is good. Anyway, thank you.